The US government already owns massive amounts of Bitcoin. Most people assume the United States government started paying attention to Bitcoin recently. In reality, it has been collecting Bitcoin for years, not by buying it, by seizing it. When law enforcement shuts down criminal operations, the government can confiscate assets connected to those crimes. Traditionally, that meant cash, houses, luxury cars, or bank accounts. But as cybercrime grew, agencies increasingly began seizing Bitcoin. Some of the largest confiscations came from Silk Road, the infamous dark web marketplace, along with ransomware operations, fraud schemes, and the massive Bitfinex hack investigation. The surprising part is that no single government agency maintained a complete public record of every Bitcoin holding. Different seizures were handled by different departments over many years. By 2025, estimates commonly placed United States government holdings at around 200,000 Bitcoin, making it one of the largest known state holders in the world. The government accidentally became a Bitcoin giant before it ever decided what to do with it. What the Strategic Bitcoin Reserve actually is. In March 2025, the United States introduced something new, the Strategic Bitcoin Reserve. Many people assumed this meant the government was about to spend billions buying Bitcoin. That is not what happened. The reserve was initially designed around Bitcoin already owned by the government through asset forfeitures and seizures. An important detail often gets missed. The government created two separate categories. Bitcoin was placed into the Strategic Bitcoin Reserve. Other cryptocurrencies were placed into a digital asset stockpile. This distinction is significant because it officially separates Bitcoin from the broader cryptocurrency market. Whether someone agrees with the reasoning or not, policymakers treated Bitcoin differently from every other digital asset. Instead of viewing seized Bitcoin as something that should automatically be sold, the government began discussing it as a potential reserve asset. That may sound like a small policy change. It is actually a completely different way of thinking about Bitcoin. Why the government stopped selling Bitcoin. For years, the United States government routinely auctioned seized Bitcoin. Once legal proceedings ended, the Bitcoin was sold and the proceeds went to government accounts. At the time, this seemed perfectly reasonable. Bitcoin was viewed as a confiscated asset, not a strategic one. The problem is that Bitcoin kept appreciating. Some auctions that generated millions of dollars would later represent holdings worth hundreds of millions or even billions. In hindsight, many of those sales look painful. Imagine discovering a box of gold, selling it immediately, then watching its value multiply tenfold years later. Supporters of the reserve argue that this happened repeatedly. As Bitcoin became larger, more liquid, and more widely accepted, policymakers began asking whether selling every seized coin was actually the smartest approach. This led to a new idea. Instead of treating Bitcoin like confiscated property waiting to be sold, treat it more like a strategic national asset. Some officials even began referring to the concept as a digital Fort Knox. Why Bitcoin is compared to gold. Bitcoin is often called digital gold. At first glance, that comparison sounds strange. Gold is a physical metal. Bitcoin exists only as digital information. The comparison comes from scarcity. There will only ever be 21 million Bitcoin. That limit is built directly into the system. No government can create more. No central bank can issue extra units. No company controls the supply. Gold became valuable partly because it is scarce and difficult to produce. Bitcoin supporters argue that Bitcoin has similar characteristics. Another reason is portability. Moving large amounts of gold across the world is expensive and slow. Moving Bitcoin can take minutes. Supporters see this as an advantage in an increasingly digital economy. Critics argue that Bitcoin lacks gold's thousands of years of monetary history. Supporters counter that every reserve asset had to start somewhere. That debate sits at the center of the entire reserve discussion. Why? Countries hold strategic reserves. Governments do not maintain reserves because they enjoy collecting assets. They do it because reserves provide security. Many countries hold gold reserves. Others maintain foreign currency reserves. Some keep strategic oil reserves for emergencies. The purpose is usually the same: preparation. A reserve is an asset that may become valuable during periods of uncertainty, crisis, or geopolitical tension. For decades, gold served this role because it was widely recognized and difficult to inflate. Foreign currencies help governments stabilize trade and financial systems. Strategic oil reserves help protect against energy disruptions. The Bitcoin reserve idea follows this same logic. Supporters believe Bitcoin could become an important strategic asset in a more digital financial world. Whether that prediction proves correct is still unknown. But the reserve concept itself is not new. Only the asset being considered is. The global Bitcoin race already underway. The United States is not the only government holding Bitcoin. Several countries already possess significant amounts. China reportedly controls large holdings obtained through criminal seizures. The United Kingdom has also seized substantial quantities during investigations. Then there is Bhutan. Bhutan is one of the least discussed Bitcoin stories in the world. Instead of acquiring Bitcoin through seizures, Bhutan has reportedly been mining Bitcoin using surplus hydroelectric energy. That means the country has been converting renewable energy directly into a digital asset. El Salvador has also accumulated Bitcoin through direct purchases. What makes this interesting is that governments are arriving at Bitcoin from completely different directions. Some obtained it through law enforcement. Some purchased it intentionally. Some mined it. The result is the same. Governments that once ignored Bitcoin are now holding it. And increasingly, they are watching what other governments do. Why El Salvador became the world's Bitcoin experiment. In 2021, El Salvador became the first country to make Bitcoin legal tender. The entire world paid attention. Supporters called it revolutionary. Critics called it reckless. The government began purchasing Bitcoin and integrating it into national policy. The results have been mixed. Tourism increased significantly after the international attention generated by the Bitcoin initiative. Foreign investment interest also rose. However, domestic adoption proved more complicated. Many citizens continued using traditional currencies for daily transactions. Some businesses embraced Bitcoin, others largely ignored it. The experiment demonstrated something important. Adopting Bitcoin nationally is far more complex than simply declaring it legal tender. Even so, El Salvador became the first real-world case study of what happens when a country seriously embraces Bitcoin. Every government considering Bitcoin now has a practical example to analyze. Why governments are interested in Bitcoin now. Several factors are driving government interest. One is inflation. When money supplies expand rapidly, some policymakers begin looking for assets that cannot be created at will. Another factor is diversification. Countries already spread reserves across different assets to reduce risk. Some see Bitcoin as a potential addition to that mix. There is also a geopolitical angle. Many reserve systems today depend heavily on traditional financial infrastructure. Bitcoin operates on a global network that does not belong to any single country. Supporters view this as a strategic advantage. Another less discussed factor is optionality. Governments may not know whether Bitcoin becomes extremely important in the future, but they know acquiring some today is easier than trying to acquire large amounts later if demand explodes. Sometimes strategic decisions are less about certainty and more about preparation. The risks governments worry about. If Bitcoin were an obvious choice, every country would already be buying it. The fact that most are not tells you something. The biggest concern is volatility. Bitcoin can experience price swings that would be considered extraordinary in traditional reserve assets. Governments generally prefer stability. There are also custody concerns. Holding billions of dollars worth of Bitcoin requires secure storage systems. A mistake can be catastrophic. Regulatory uncertainty remains another issue. Different countries continue to approach digital assets differently. Political risk also matters. A new administration can have very different views from the previous one. Finally, Bitcoin remains relatively young compared to assets like gold. Many governments simply want more time before committing significant portions of national reserves. Could Bitcoin become a reserve asset like gold? Nobody knows. That is the honest answer. Supporters believe Bitcoin's fixed supply, decentralization, portability, and growing institutional acceptance make it a strong candidate for future reserve status. Critics argue that its volatility, relatively short history, and uncertain regulatory future make it unsuitable. The truth is that reserve assets are not created overnight. Gold spent thousands of years earning its position. Bitcoin has existed for only a little over a decade and a half. What makes this moment important is not that Bitcoin has already become a global reserve asset. It has not. What matters is that major governments are beginning to discuss Bitcoin differently than before. They are no longer asking whether Bitcoin exists. They are asking whether they should own some. And historically, that is often how major shifts begin. And if governments are now treating Bitcoin differently, it raises a bigger question. What exactly are all the other blockchains doing? We answer that in Every Blockchain Explained.